It's your boy Big Rob back in the house. Welcome to City Crypto. If it's your first time checking us out, we are an entertainment-focused cryptocurrency channel where, unlike the other channels, we take old, boring, and stale information and repackage it up in a fun and sexy way. We're also staunch supporters of Bitcoin, which has been trading at 30,000 for quite some time, but the floor has fallen, and now we're at 29.7. Still range bound at the 30K area, but we have all support, question mark. So a lot going on today. We're going to cover Gary Gensler and his testimony at a House committee hearing. We also have NASDAQ rewinding and falling back on their plans to custody crypto. Also, Fed Now is live now. So the Fed's payment system that moves money fast as blockchain and fast as Ethereum, as they advertise, well, that's live. So what does that mean? And we'll get into that as well. And then also we got some Prime Trust, the custodial wallet service for some of these exchanges, the backdoor or the back end operations for custody on institutions. They have some developing news that we're going to cover in a minute. But before we get into any of this, I want to introduce our second co-host. We got Forrest from Sistine Research. What's up, brother?
Oh, what's up? I'm back.
There it is. You got a couple more days with you on the team here. With no David. David's, in case y'all don't know, David is in Disneyland or a Universal Studio, one of those places down.
He's always in Disneyland.
Yeah, he's always in Disneyland. That is cool. Now, before we get started, I do got to give a shout out to our channel sponsor, Cam's Blue Wire Tech. And so today's 4K live stream is brought to you by Blue Wire Tech. And they offer business-grade IT solutions for your network and also business-grade networking security as well. So if you run a business and you want to secure your network, check the link in the description down below. And then also, want to take before we get too serious into it, want to take a look at the old funnies. And so a little roundup on Twitter and social media. Here we have Alan Carroll has put NFT projects minting in the bear market. And what does this look like? Yep, that's right. This is not a green screen behind her. She is literally dancing in front of a forest fire. So this, I feel like they'll do anything for clicks nowadays. And then,
yeah, you can't mint in a bear market. It's just not a good idea.
Dude, has there been any rivals to the blue chips? I know there's been some NFT projects that have had mediocre success, but has there been any competition to the blue chips that have been minted during the bear market that comes up to mind for you, Forrest?
Zuki committed suicide with their latest update. Zuki's just been free falling. They just completely diluted their supply, launched 20,000 NFTs on top of their 10,000 collection, and they looked identical. Right now, it's basically DeGods. If you look at the relative strength of NFT floor prices right now, DeGods have been holding up really well. Bored Apes and Mutant Apes have been sliding lower and lower. Otherwise, the strongest project right now on Solana is probably Mad Lads. That was the last hyped mint that did really well. Otherwise, it's just, it's been a bloodbath in the NFT market recently. Nothing really popping off.
Yeah, I have a suspicion that when the bull market kicks off, in the same way that the bull market kicked off in 2020, 2021, the NFT sector took a little while. It lagged behind the altcoins pumping. I got a feeling this is going to happen again. And I think when these altcoins really start to rally, it's going to take a little while for those profits to spill over into NFTs. I think a lot of where the NFT market rallied and pumped came from people just taking profits and not knowing what the hell to do with it. And they were just buying the most speculative assets they could. And at the time, people didn't really know what the NFT sector was going to look like. It was still in its infancy. It's still pretty new, but even then it was even newer. I think people were just YOLOing money because they didn't know what to do with it. And so I think the next bull market, I would be a little hesitant to jump in NFTs right at that onset of the parabolic run up. My personal kind of sentiment there. I want to take a look, and the next one I got here on the social medias. Well, I'm just gonna let this one speak for itself. It's kitty cat.
That's hilarious.
Anyways, yeah, you got dancing cats. I think that the NFT sector, kind of to get back into that. They do have those motion NFTs, music NFTs. Oh, you think there's anything to perhaps a GIF with audio in it being traded with any kind of real value, or do you think it's more subjective art in a still format? Where do you think this is leaning?
And it's funny because like I feel like the entire NFT space is having an identity crisis around like what actually constitutes value. Like, yeah, you've got like your stuff that's like strictly art, which is like fidenzas and ringers. This stuff that like it's pretty illiquid. It does, they'll have a couple sales a year, and those couple sales a year will be in the millions of dollars, or in the case of fidenzas, maybe in the hundreds of thousands of dollars, right? But you're not seeing just a ridiculous amount of trade volume between them back and forth. And that I get, that's just, strictly art. Then you've got the PFPs, the profile pictures, and those are really just like community-based tokens and token gating. And the use cases vary from memberships to, staking your NFTs for some sort of Ponzi token or whatever that may be, or in the case of like Pudgy Penguins, they're trying to do stuff with the intellectual property. They've launched like toys on Amazon. You've got Azuki, which is trying to go into like the anime space. But it's really, really difficult to drive value back to the holders without diluting the overall project. And that's the thing that the NFT space is struggling with really hard right now. So I don't know. Maybe we'll see some innovations in terms of like, video-based NFTs or music-based NFTs. I personally think that NFT tech in the first place is perfect, like literally perfect for how music royalties work and could make that business much, much clearer. However, upsetting the current model and getting a bunch of, large artists to buy into an NFT based royalty system could be difficult. There's all sorts of use cases. It's really just a matter of, what people find value in and what they're willing to speculate on. If someone's willing to buy it, it's got value.
I think it's possible that NFTs will just kind of do what traditional art has done, just keep scarcity and just wait over time for it to increase in value. And that's
some
how most traditional art.
yes, others I think will fade into obscurity if it's like I feel like a lot of like these 10,000 profile picture projects like Bored Apes, and I'm not saying like Bored Apes, but like the copycat to Bored Apes, that you have all these profile pictures in these communities. Like if you don't have the community or you don't have the leader of that project just staying relevant on Twitter and staying in the airwaves, and you just kind of fade into obscurity, there's just so much competition there. There's hundreds of these profile picture projects that it's like they're really not that. I mean, some have cool art, some don't. There's not a differentiator aside from who can go viral, who can stay relevant, who can do something cool, who can make people willing to speculate on the tokens. This is something that DeGods has done a really good job of, and they've risen through the ranks slowly. I think they're the third largest profile picture project at the moment on Ethereum, and you see a lot of these other ones just slowly fading into obscurity, and that's the risk for profile pictures. But I do agree. I think a lot like the art based stuff is going to hold its value a little bit better.
Yeah, I know the Bored Apes are last I checked them yesterday, they were at 33 ETH, down from I think 160 was their all-time high. I'm not exactly sure the number.
I can pull up the dollar chart. It's actually staggering when you look at the chart. It'll take me a second, but it's actually worth looking at.
The 30 ETH, that's what, 60 grand, right? Is that what it is?
Something, yeah, just about 60 grand. Yeah,
Little
so
shy.
let me actually share my screen here. This chart this is the dollar chart, not the Ethereum chart. This is the dollar chart. Your all-time high was up there at $450,000, right? People were spending 450 grand on for the most common Bored Apes, right? The most common Bored Apes, we saw a 85% drawdown, just like we are a little 87% drawdown, just like we have in a lot of altcoins. But man, it's just been since the top, it's dropped like a
Wait,
rock, and it's
if
just been
this was a
slowly
chart,
bleeding off.
if this was a chart on any popular layer one that had some history in it that has been through a bear market, you would feel pretty confident that you're going to, get some more price movement in the next coming bull run. And maybe you don't cross all-time highs. We saw that from the bull market in 2017 to the bull market in 2021, where certain projects were in the top 10 in the past, and well, they just never performed like they did in the previous bull market. And maybe that happens again with altcoins, but I don't know if you get a resurgence in price NFTs. I cannot confidently say, hey, why don't we buy this Bored Ape now? And we know that it'll get to his previous all-time highs. I don't know if that's the case. And I think it is because of the
I
lack
agree.
of utility. I just feel like the risk appetite for me is I would just rather just pick up an altcoin. I'd rather pick up some, Cardano, even PNB chain, Solana, Dogecoin, I think has more of a surefire bet to come back in the next bull market. So I don't know. That's kind of where I stand. And then lastly, I just want to wrap up with, we're going to cover some AI here. Gary Gensler plans on using AI. If he testified yesterday in front of the Senate, and he asked for more money to regulate crypto, but he did say that he was going to start using AI as part of his team, as part of the watchdog services. And so if he doesn't get money, he's just going to use AI. So he's doing what other businesses are doing here and just trying to trim the fat and bring in AI. But some people ain't down with AI, and some people just don't like it. Now, Rocco, you pull this up?
How are you, man? How you doing? I apologize if there was any confusion. I am an AI language model developed by OpenAI called ChatGPT. I am here to provide information, answer questions, engage in conversations, and assist. Whoa! Hey, whoa! A robot! Wait! No! How are you, man?
Some people are just confused with the tech, and they're just like, no.
That's hilarious.
You're creeping me out, man. I don't care if you are a robot. I'm gonna punch you in the mouth. So there's that. We'll get into AI and Gary here in a little bit. But before we do, I do want to do a quick market overview. Today's Market Watch is brought to you by iTrust Capital. This is our second sponsor. And so iTrust Capital offers a vehicle for you to buy or dollar cost average and buy your Bitcoin, pay taxes now, and not pay capital gains later through Roth IRAs and other services as well. We're going to leave the link to their website in the description. And if you use our link, you get an extra $100 when you first onboard some money. Now, getting into the charts here, the biggest movers. Well, we got Bitcoin at $29,731.99. Now, as I mentioned, we've fallen off of that 30K mark, but it's not too far, honestly. I mean, we were at 30K for a week. We dipped underneath 30K a couple times in the last couple days, but it seems like we're losing support. I will pass this over to you there, Forrest. What are the Bitcoin's charts telling you? Are you concerned that we're now trading for over 24 hours, almost 48 hours, under $30,000? Is 30K, in your opinion, a area of resistance? Or do you think we're still range bound and we're just slightly below the target range at 30K?
Yeah, so I would say that we're still technically range bound. We haven't broken our range lows quite yet at around 29.7 to 29.5. I mean, you could draw these as low as realistically 29.5. If you wanted to draw the top of the range, you could draw it as high as 31.4. I like to use this margin pressure level here at 31. We're technically still at the bottom of the range, and until we break it, you actually get pretty decent risk reward here for actually buying and turning around and selling at 31, right? You could have done that, many times, buying at 30 or below and then turning around and selling at 31. So there's a decent chance that we just run it right back up. Now, we zoom out a little bit and we look at this larger picture, and then we also take a peek here at RSI. You don't have necessarily strong bearish divergence, but what you do have is just weakening RSI. RSI is just trending downwards while we are consolidating, and that can often lead to you kind of breaking through support on the downside. Now, if we zoom out and just look at the overall kind of trend line we've established, as well as this 10x long margin pressure level, where you can start going long on 10x leverage while maintaining a liquidation point below this last swing low, it starts to look pretty attractive as a place to target and as a place to bid. So I don't know what Bitcoin's going to do here in the short term. Maybe it continues to range here, but if it does fall out, that's where I'm looking to bid at around 27.5. And you can see that's been a pretty key level in the past here. I'd be looking to bid it in line with this trend line, right? And if that trend line ends up holding, then what you have is a really, really clean ascending triangle, which is super, super bullish, right? So you'd look for something like that. Now, if we drop, the more bearish scenarios, we break through there, and then we're just looking to shorts. We're looking to short this back down to 25.7 and back to the top of our prior range for Bitcoin, which is around 25, right? So we'd be looking to kind of double bottom here, hopefully. But otherwise, I do think 27.5 is a bid. If you're looking for a scalp, I don't hate the idea of looking for a reclaim of 30K and then trading it up to 31K. But otherwise, 27.5 is that support level that I'm personally really looking at hard.
All right. Now, real quick, I'm just going to take a slight intermission to give a shout out to the chat. First of all, Jimmy gifted 20 memberships. So big shout out to you, Jimmy. And then some of the new people we spotted out here in the chat. Also, if you are new, say hello so we can drop an hola back at you. We have L. Wright, FUD Expert, Brett G, FL Sunshine, Crypto SEC Guy, the letter G, Crypto Reaper, Calvin V, New Crypto, and Willow. So all of you, hola! Welcome to Sin City Crypto. Also, we are at 50 likes. Way shy of where we should be. Less than 50% like ratio, 40 something. So do us a favor and props up to David's desk and hit that like button. There we go, guys. And this is now a permanent like representative over here. So now I want to move on to one of the biggest gainers I've seen on today's 24-hour chart. Up 16% today, up 20% on the week, is Chainlink. So leading the charge in the top 100 in the 24-hour chart, Chainlink. Now, for those of you wondering, why is Chainlink pumping? What is going on? Well, it was 2 days ago, we had the launch of Chainlink's CCIP protocol. Now, this is their cross-chain interoperability, and this is offering their security and their Oracle services that seamlessly work with right now EVM-based protocols, Ethereum, Optimism, Polygon, Avalanche. Also, this does spill over to it also spills over to Aave and Synthetics as well. Basically, you're going to get a lot more utility use case when it comes to the Chainlink ecosystem and where it's plugged into. Now, is that the reason it pumped, or did something happen on the charts? I'll send it over to you, Forrest. What are the Chainlink charts telling you? And then, yeah.
Yeah, definitely. So that's absolutely the reason why Chainlink pumped. It's why it was able to push through this kind of downtrend line resistance. If we just isolate for kind of this range that we've been in for over a year, from the high to the low, and we quarter this out. Sometimes I just like to quarter out the range. So obviously, there you've got the midpoint. This is the 75% retracement towards the top of the range. That's where we're holding resistance right now, and that's been a key level at around $8 and change, maybe $8.40. And then your top of your range here could have a little bit of meat left on the bone here if we get a little correction and recovery of $8.50. You're looking at just under $10. But Chainlink really running hard. I do want to throw on the long margin pressure levels just to check from the bottom here, see if we've gotten to our 2x yet. No, we haven't. And what we do see, however, is a really nice confluence with the top of our range with our 2x long margin pressure level coming in at 950 and our 3x long at 714. So if you're looking for an entry, you want to go long on Chainlink, you're looking at $7.14. That's where those longs can start pushing the price of Chainlink back up, because you can go long on 3x leverage, maintain your liquidation point. You're betting that the low for the bear market for Chainlink is in. I think that's a pretty safe bet. My personal opinion, of course, things could deteriorate and things could go down from here, but I don't think it's likely for Chainlink. Also, I think Chainlink is one of your better bets for the next bull market. I think Chainlink it's among the highest rated cryptocurrencies that I've got rated. It has underperformed in this bear market. I say underperformed. Most coins have performed pretty poorly, but you haven't seen it get a huge rally like some coins have off their bottoms recently. So stuff like Cardano's gotten pretty decent bounces. Polygon is ripped up from 40 cents to over $1. You had QNT going down to like $40 and ripping back up to 200, whereas Chainlink has just been range bound here. So I do think that Chainlink is a top choice for the next bull market. And right now we're still range bound, but we're firing up towards the top of our range, and I think there's a decent trade to be had at around $7.14.
I think when you look at the utility and use case when it comes to Chainlink, it being an Oracle service, it might not be the most sexiest investment when it comes to or play when it comes to retail investor, but it's such an integral part of the smart contract ecosystem that it can't be ignored, and it's just leading the way by leaps and bounds. And so there's not very many popular layer ones that we talk about on the regular that already haven't integrated with Chainlink or use their services. I do want to jump into a big headline today that a lot of other media outlets are covering is the FedNow launched today. So FedNow payments, a lot of people are overhyping this to be a CBDC. That it is not. It is basically the upgrade for the federal system, the Fed's payment system. And, there's a lot of talks that, hey, it's going to speed up your transactions. Well, not so fast. So the FedNow payment system. So the Fed, here, I'm just going to I got some things highlighting on this article. So the Fed Reserve has launched a long-awaited system. Now, this is allowing everyday Americans to send and receive funds in seconds, 24 hours a day. So the current system, or at least the SWIFT system, is operated Monday through Friday. So we know that processing for payments, especially through the SWIFT system internationally, does not process at the same speed over the weekend as it does on the weekdays and bank holidays. Anyways, this service though is the FedNow. It's integrated with the 41 banks and 15 service providers, also known as the Fed's master account. And so the services are really just for those institutions, right? It's for their banks and their credit, the credit agencies that operate, the credit unions that operate with the banks. Now, the Fed said in a statement that 35 banks and credit unions were utilizing the service, as well as the Treasury Department's Bureau of Financial Services. So moving money yourself personally between accounts and using your credit card is not going to speed up. So that is a misconception that people are throwing out there. It's more just the banks moving money. Now, there are different upgrades that are coming to the Fed now. So this is just the first rollout. So just keep in mind that right now, just the banks and the credit unions moving money, and the Fed and the Treasury Department issuing money between the banks, that has become more efficient and sped up. Now, the So unlike peer-to-peer payment services like Venmo and PayPal, which act as intermediaries between the bank, payments made via FedNow will settle directly in central bank accounts. The Fed operates a real-time payment system called the FedWire. So if you ever hear FedWire, that's in reference to the payment system or rails that the Fed now uses. And then lastly, the Fed officials have downplayed the concerns, arguing that banks have tools allowed to mitigate outflows when it comes to a payment limit of $500,000. And so there is a similarity between proposed CBDCs and what that'll look like and the Fed now. So they can impose limits. And as of right now, the limits are at $500,000. And there are also, they can impose minimums as well, and they can blacklist accounts as well. So this is an upgrade on the payment infrastructure system. However, take that with a grain of salt. There is a little bit more control, but I'll send it over to you, Forrest. What's your immediate reaction to the FedNow payment system? Is this concerning to you? Do you think it's simply an much needed an upgrade and really not much to see here? It's just the Fed sends money to the banks a little quicker. Or do you think it's more to come?
Yeah, I mean, ultimately, I think it's. I'd say there's not much to see here. Perhaps, right? Maybe they're laying the groundwork for CBDC. If you want to get speculative there, throw on the tinfoil hat a little bit, which is fine. Yeah, but in the meantime, I don't think this is. I mean, obviously, it's super centralized, but it's designed that way. It's not a. Are they even using blockchain technology? Does it say if they're using blockchain?
They're speeding up their own ledger, and they're using nodes. So I don't know exactly how it operates, but it does not use any blockchain technology.
Gotcha. Yeah, personally, I not a whole lot to comment on here. It's interesting, something to keep an eye on, but maybe it's the gateway for a CBDC integration later on.
I think it's obviously needed. It's just, did they sneak in extra control features in there? Did they infringe on your privacy without us knowing? That's my one concern. But to sit here and say that like we should keep the payment system slow and processing to 2 to 3 days, I think it's we can all agree that that's not the most efficient way of operating. So I do want to bring in our next guest here. We have a longtime favorite here, someone that joins us quite regularly. We got Scott Melker, the Wolf of All Streets, joining us. And Rocco, we got him ready? There it is. So for those of you that don't know Scott Melker, well, he is the Wolf of All Streets channel. And then he's also been running and co-hosting the most successful Twitter Spaces in crypto with the last episode. I think you had about 165,000 listeners. So always a pleasure having you on, Scott. How you doing today?
Good, man. I think I've seen you in literally every single crypto conference that I've gone to. You're always there. Are you literally at all of them? Do you have a clone?
Yeah, we leave David behind to hold down the fort. So I guess we have the opportunity to have a 2-man show. So I can leave and go to conferences and hang out and have drinks and party and after parties. And then David holds down the show.
All I see is we actually gave him selfies with a drink. Robin selfies with a drink in his hand. Yeah, I know. There for business. I know how it is.
How was real quick before we jump into it? How was because I ran into your consensus in Bitcoin. What was your immediate takeaways? I know the attendance was a little low, but were there? I didn't really get to talk to you too much on this at the Bitcoin one. So what was your immediate takeaways on those?
I mean, wildly underwhelming, but I think that's not their fault. I think it's just the nature of the beast in the States right now. I think there's a lot of regulatory concern. People just aren't that excited. People got washed out in the last bull market as things went bare, and makes sense that you would see attendance drop from 35,000 to 10,000 people because that's honestly, you would think it would go down to like 5,000 based on how many people you have to imagine lost all their money or got washed out. But I mean, I have high hopes that things will improve over the coming years. We'll start to get the hype back. We'll start to see new use cases, and we'll repeat the same cycles we saw before. I can tell you, though, that when I've gone to conferences in Asia and abroad, the excitement is still really there. So I think this is pretty unique to the United States, where we have this particular regulatory regime cracking down and kind of killing all the fun.
Mm. All right. Well, the cracking down has been led and spearheaded by, well, the SEC and Gary Gensler. Well, at least they've been the poster child for anti-crypto in America. I think that is a broader narrative. You know, we talk about choke point 2.0. I think that Gary Gensler is the face and the bullseye when it comes to anti-crypto, and I think he doesn't mind playing that role. And for that reason, I wanted to jump right into Gary Gensler. I know yesterday you tweeted. I'll pull up my Twitter account here. And we have a video with Gary Gensler here, and I'll just play this. I got some other info on this one.
Technology is also rapidly transforming our markets and business models, whether it's electronic trading, the cloud, artificial intelligence, of course, predictive data analytics, and the chair also mentioned things about what I would call, not your words, the Wild West of the crypto markets, rife with non-compliance where investors have put hard-earned assets at risk in a highly speculative asset class. Such growth and rapid change also means more possibility for wrongdoing. As the cop on the beat, we must be able to meet the match of bad actors. Thus, it takes time, and it makes sense for the SEC to grow along with the expansion. Again, we're just about the size we were 7 years ago.
So he's lobbying for more money. That was one of the big takeaways from his opening statements there. And I did have I didn't want to play any long segments. So I did find this article that highlighted some of the big takeaways. I'll just kind of run through this, and then we'll just get our reaction on the hearing and what our thoughts were. We have due to lack of regulation in Wild West-like crypto sector, we observed that the investors are risking their hard-earned assets on speculative assets. Rapid technology developments in financial markets have led to the abuses of cryptocurrency and other emerging fields, and they need new resources to prevent that. There are 15 to 20,000 tokens. Most of them fall under investment contract status. And they also say that the CFTC, which I chaired for a term, has no such authority. So he's saying CFTC has no authority in this cryptocurrency sector. If you're collecting money from someone, it falls under securities law. So if someone owes me $5, that's a security. And then blockchain technology may have some use cases. So Gary did come out and said, blockchain technology has some use cases. It's not all for fraud, and American investors are not provided with the necessary transparency, which we know that blockchain is not transparent. Also, we have strong powers in the SEC. Some of the tokens are not in our jurisdiction. They are a few in number, but they exist. So is he referenced? He says few. So that is
I
more
will
than,
not name.
That is
I will
more
not
than
name.
one.
I won't dare tell you what they are. It's like the IRS being like, we know exactly what you owe, but we're going to penalize you if you can't figure it out yourself.
Exactly. And then he also says that Bitcoin, on the other hand, has anti-fraud features. Yes, there is anti-fraud features in Bitcoin. Satoshi
got a built-in car alarm.
Satoshi built those in and protected by Viper. Okay. So I'll
literally, like, what does that even mean? Like, if you send a Bitcoin, does it yell protected by Viper? What are the anti-fraud features of Bitcoin that don't exist elsewhere? What does that even mean?
It's simply transparent. That's literally that's the anti-fraud features. Is
it
that you can look under the hood.
I mean, is that the anti-fraud feature? Okay, cool.
So I'll send it off to you first, Scott. You had we had that clip that we played first. You had tweeted out. And, he did reference AI in there as well. And, what was your big takeaways on his Senate testimony?
Well, I think that he's obviously, he's an implant, and that's pretty much well known from Elizabeth Warren and a certain sect of the Democratic Party who's anti-crypto and anti-big tech and anti-billionaire. So the fact that he would now say, hey, dude, don't talk to me about crypto. Let's talk about AI, which has been his new talking point, makes perfect sense. They literally want to squash any monopolies, any mergers and acquisitions, any new tech. That's been the mandate, and crypto has been a major focus of that. Now, they've hired massively for crypto enforcement, so it's kind of hilarious for him to say that they need $72 million to crack down on this. But to be honest, I think he's about to become a political liability. I mean, if you watch now these hearings, it's not just the same Congress people yelling at him about his poor taste in crypto, on crypto stance and regulation, but now they're mad at him about how he approaches almost everything. It's really, I think, the tide turning here. I think he went way too far pushing against Coinbase, and now the loss, however you want to skin it, the narrative is that it's a loss and that's all that matters. But the Ripple loss basically kneecaps their entire case against Coinbase, because if Ripple is not a security, then nothing that they're going after Coinbase for is a security. So I think that he's just backtracking. Their entire position is weak and in big trouble, and now he's bit off more than he can chew. You know why he needs $72 million? Because he decided to go after Coinbase, Ripple. Well, Clayton went after Ripple, but he has to still deal with Ripple, Binance, Grayscale, all at the same time, and they're not going to have the resources to do that.
Yeah, it's I think the narrative is shifting, and he's getting a lot more pushback, because it seemed like the Republicans were the ones that were more or less asking the aggressive questions at these testimonies, and now you're seeing it from the Democrats as well. So both sides
Richie
of the party,
Torres.
yeah, both sides of the party are turning up the heat. I think that even if you're anti-crypto, you're looking at Gary, you're like, hey man, I thought you were like, spearheading this thing, you were leading the charge, and well, you dropped the ball on the XRP, and pretty much through that court case, through that summary judgment, we've determined that crypto assets are exactly that. They're assets, and they're not securities, and that you could take the asset and lump it into a securities contract, and that could be illegal, but the assets themselves are not securities. And this whole narrative that you got going against these exchanges, it all falls flat if the assets are just exactly that, assets and not securities. And so I think that everyone's kind of pissed, even the people that are anti-crypto, because, well, he's not doing the job that they were expecting him to do. I know you mentioned AI. So he's planning on using AI to, if he doesn't get the money, he's just going to hire a bunch of computers, and they're all gonna go after AI. So
ChatGPT, find me securities and find me securities on Uniswap.
Dude, it's like a small business trying to scale without hiring new employees. They just say, hey, let's let AI do it. And so you have here in the speech delivered at the July 17th National Press Club, Gensler outlined several areas where AI could assist the SEC as securities watchdog. So Gensler emphasized the value of AI in market surveillance, disclosure review, exams, enforcement, economic analysis. And he also stating that we at the SEC could also benefit from staff making greater use of the AI in their market surveillance, disclosure, exams, blah, blah, blah. Now, you have the chair highlighted the importance of leveraging AI and the enhanced efficiency and effectiveness of the regulatory process. Now, it's kind of funny that the man wants to use a code-based software to regulate the industry, and he doesn't believe in code-based software that is digital currencies. So he likes software and he likes code to help his job, but he doesn't like code and software in the industry that he currently regulates. They've had over 2,000 different rule proposals in the SEC, and yet not one has came over. He's not done one rule proposal for the digital markets in cryptocurrency. So so the SEC recognizes that they need to conform with technology and emerging trends. However, they have not conformed at all in the slightest when it comes to digital assets. But yet, hey, why not just bring in some AI? The thing just launched 6 months ago. Why don't we just use this thing to regulate? It's a great tool. I'm going to send it over to you, Forrest. What is your initial takeaway with Gary Gensler's testimony and how he wants to leverage AI moving forward, whether he gets more money for his campaign against crypto or not?
Yeah, I mean, it sounds like he's short-staffed. I think he's in over his head. I think he's probably overstepped. I agree with Scott. Ultimately, I'm genuinely surprised by how far he overstepped and his choice to regulate by enforcement so aggressively and go after Coinbase and Binance and among some other key players in the industry. It almost feels like he's been on a timeline and he's working towards a deadline. And I don't know if that deadline has anything to do with the Bitcoin halving. I don't know if it has anything to do with the Bitcoin ETF and clearing out some incumbents before traditional finance comes in and swoops in to take over a large part of the market share. But for the longest time, Gensler was kind of almost all bark and no bite. He was just obviously very vocally anti-crypto, but we didn't see anything major. Like he went after Library, which was kind of the sweet spot for kind of kneecapping the crypto space. Now that he's overstepping and now that he's actually suing Coinbase and these cases are being put in front of judges, it's making him look really, really bad. Every time the case gets thrown in front of a judge, the judge is like, what's going on? We just had the judge that looked at the Coinbase case and had the same comment that the rest of the space had, is like, if they were selling securities, if Coinbase was selling securities, why did you approve them to IPO? Right. Which again, from a technical legal perspective, like we understand and we know that that's not necessarily what the due diligence for an IPO actually means. Right. It's not a green light on the rest of their business, but still, it's just common sense, right? So, look, it sounds like he's grasping at straws. I like AI is so new. I don't know if he even understands the exact applications of how to use it to survey the market. Like it just like, is he talking about ChatGPT? Is he talking about building something from the ground up to specifically survey for securities? I don't know. But he sounds borderline desperate, or just almost like his back's up against a wall. I don't know. It's bizarre.
All right. I do want to shift the topic of conversation to Prime Trust. I know this is something you've been regularly covering there, Scott. So in something that happened about 2 days ago, so the Nevada courts approves a regulator's petition to place Prime Trust into receivership. Now, this is a temporary move. Now, the 8th judge of District Court of Nevada, also the home of City Crypto, has granted the petition for the state's Financial Institution Division, NFID, placing the crypto custodian Prime Trust into receivership pending a hearing to show cause. We have Prime Trust will have an opportunity to show cause why the petition should not be permanently granted on August 22nd. So at some point, they'll be able to make their case on why they should not have someone else run the company. But this is a tweet from the Nevada Department of Business Industry, basically echoing the same thing. The District Court of Nevada has ordered the Prime Trust LLC into temporary receivership pending an August order to show cause hearing. Then just to expand on this, the order requires Prime Trust employees and executives not to take any actions interfering with the court's decisions. According to the court filings, the Prime Trust agreed to the petition for receiving with the Financial Institutions Division based on the substantial deficit between assets and liabilities. And I'm glad that they've finally recognized that there is a deficit there, because for the longest time, for over a year, they had said there was no deficit and that everything was buttoned up and accounted for. Now, according to the June 26th petition, so this is just giving a little context to the story, Prime Trust owed more than $85 million in fiat and $65 million in crypto to its clients. However, the firm reportedly only held roughly $2.9 million in fiat. That is a gap of $83 million, and also $86 million in crypto. And so I'll send it over
Which
to you,
was
Scott.
all Audius. 63% of the crypto they were holding was one illiquid coin, which was audio. Yeah. So, I mean, this one triggers me. I'm sorry, because it ruined a whole week of vacation for me. When Prime Trust, this is the biggest story that gladly nobody's really telling in crypto, because this is not the numbers, but the level of audacity and fraud here is a bigger deal even than FTX. And I'm not even trying to be hyperbolic, because this is a registered, licensed custodian who has literally one job, which is to custody your assets. And what Prime Trust did, so I don't even want to go through the whole timeline. Basically, we did a story when we found out David Bailey from Bitcoin Magazine tweeted out that a huge custodian was going to go under, get your money off exchanges, even Bitcoin only. So we started digging, found out it was Prime Trust. And then we started, once we kind of put it out there that it was Prime Trust, we started hearing these rumors that maybe some exchange at some point in the last year had lost some private keys, not exchange, custodian. Right. And then I got multiple calls of investigative journalists. I didn't know what to do with this information. I chose not to share it, but kept getting calls that, oh, Prime Trust not only lost keys to one of their wallets, they then decided to basically take custodied assets from their customers, steal them, and buy Ethereum and other assets to then replace the holes every time somebody redeemed. So it became a full-on Ponzi scheme where they were using custodied assets of exchanges and customers. Like, these are the guys your exchanges and your institutions trust. So this isn't even just an exchange collapsing, just outright ridiculous fraud. And we thought the number was only 25 million. And it turns out it was much, much bigger. But you can see they were literally like speculating on shit coins, nothing against audio, to try to fill the hole. And they're licensed and they have one job. Like, how do you lose the private keys to one of your wallets, first of all, when you have simply one job, which is to protect those? And then how do you not call your insurance or tell your clients, but then try to cover up that hole by fraudulently trying to trade your way out of it? So the reason that we didn't share this at the time is because then Mike Belshi and BitGo stepped in to buy Prime Trust. But I'm talking to Mike Belshi, like, dude, your due diligence is not going to happen, man. Like, this is a train wreck. And then 2 weeks later, of course, the due diligence failed. And then there was a tweet, if you look back in March, from Bitfinex, I believe, who I think gets dismissed sometimes because a lot of FUD. But Bitfinex, on this case, said, did Prime Trust just like buy a whole bunch of ETH with customer assets to fill a hole after losing keys? And nobody saw that tweet. It's been out there since March. But this is like ridiculous outright fraud. There's no way whatever appeal they have doesn't hurt them. And this is yet, I mean, if the legislators choose to use it, this is yet another trusted institution that committed fraud in the crypto space. Massive fraud.
And I'm very curious on what they're going to present in the August 22 hearing to not give up receivership.
Their hands. They're going to present their hands like this and say, please be nice. And then they're going to say, don't drop the soap.
There you
That's
go.
it. These guys are going to jail. It's over. They're fucking idiots and criminals. And they can go share Sam's mom's basement with him, maybe, if they're lucky.
Forrest, you got any insight on all this there?
I actually just have kind of a question, an open-ended question for probably both of you, but for Scott, in that, you know, we saw that RFK Jr.'s come out and said he wants to back the U.S. dollar by a basket of assets that would you know, ideally include Bitcoin. And that begs the question of, like, if governments, if the U.S. government or other governments start stepping in and custodying Bitcoin, obviously we've seen this to some degree at a smaller scale with El Salvador and whatnot, but like, custodianship is kind of a problem, right? Like they private keys. So what happens when a government loses the private keys? How do you feel about, you know, solving the problem of custody? Does the government outsource it to a third party custodian? And if so, how do we trust them? Do they build a custody solution themselves? How do you feel about that? And you know, do you just have any insight or thoughts there?
I mean, it's a great question. My assumption is that for the United States government to actually custody Bitcoin, which, by the way, they do, right? Because they have all the Bitcoin that they've confiscated from Silk Road and such. So they clearly have some sort of process, but that's not on the balance sheet per se. I would imagine that this comes alongside BNY Mellon or State Street or one of the world's biggest custodians on Wall Street, and for institutions stepping in and saying they'll custody it, because then it would be fully insured and backed, and you would have sort of the same protections that you would have with custodying gold or any other assets that the United States custodies. That's my instinct. Otherwise, I mean, for the big institutions, the micro strategies, I mean, we know that the government, when they sell Bitcoin, they use Coinbase. I would imagine Coinbase maybe becomes the custodian. But yeah, I mean, it's scary, right? If the trusted custodians lose their keys, and we know that people lose their keys all the time, then we definitely know that we need better custody solutions if we're going to have, governments and the biggest corporations in the world. I think Tesla uses Coinbase for custody. So clearly, some people with quite a bit of coins trust Coinbase. But I really think that you just get the same custodians that custody everything else have to come in for the government to do it.
Yeah, I think you're gonna just have a handful, even if that, maybe a one or two really big trusted parties. I think Coinbase is the only one that really comes to mind. You do have Coinbase Custody Trust Company. It's a fiduciary under the New York State banking law, and it's one of their qualified custodians. It has been listed in multiple ETFs, including the BlackRock and Fidelity one as the custodial agent there. And as you mentioned, there are a host of companies that are already using those already. And it is a different branch of Coinbase. It's not the same company that, obviously under the same umbrella, but not the same company that operates the exchange. So we would trust that they would keep these assets separate. But I know Coinbase does have a pretty good history of being transparent and not doing one thing and saying they're going to do one thing and then doing the other. So I would feel confident that Coinbase will rise as the go-to or de facto custodial agent when it comes to institutions. But I'm sure there's going to be other players. Let's not dismiss banks. At some point, I do think that traditional finance, that the banks will step in. They'll see some value for custodying. That's just I haven't seen any banks leap in to the custodial services, but that's just kind of my sentiment. And so, yeah. Talking about custody, though, I wanted to shift this one over to the NASDAQ. So before the Bitcoin ETF narrative had popped off with the BlackRock listing, NASDAQ was talking about custodying crypto and offering crypto services, particularly the custodial services. And so now they have abandoned that whole business model. So NASDAQ abandons crypto custody services amid U.S. regulatory challenges. So the NASDAQ has scrapped the plans. And during a earnings call on Wednesday, CEO Adena Friedman said the company has chosen to abandon its plan due to the changing business and regulatory landscape in the U.S. Considering the shifting business and regulatory environment, they made the decision to halt the U.S. digital asset custodial business and related efforts to pursue a relevant license. Now, they did come out and say, however, we continue to build and deliver technology that positions NASDAQ as a leading digital asset software solution provider for a broader global industry. And also, this is probably because why custody when the ETFs are essentially doing that already in a publicly traded space? And so here, another quote more broadly: we remain committed to supporting the evolution of the digital asset ecosystem in a variety of ways, among them through ongoing engagement with regulators and the delivery of comprehensive technology solutions across the trade lifecycle, and through partnerships with potential ETF issuers and to support tradable exchanges listed products. And so I think that's all I got there. So so we have NASDAQ basically removing their hat from the ring of custodial agents. It seems like they're making way for the ETFs, and instead of custodying themselves, why not just partner with the ETFs? NASDAQ does service a lot of ETFs already. Why not just focus there instead of custodying it themselves? I'll send it over to you, Scott, first. What's your initial reaction on this news?
I agree with you, and I think that it's just they realized that once BlackRock stepped in the ring, NASDAQ didn't need to do this job, right? BlackRock filed for an ETF. They said that Coinbase effectively would be the custodian and the surveillance sharing agreement there. And so I'm just assuming NASDAQ's getting out of the way. It's important to remember that when someone files an ETF, it's actually with the exchange, right? So it's meaningful which exchange it's with. And BlackRock was the first to file with NASDAQ. The rest had filed effectively with the New York Stock Exchange or CBOE, but they were the first to file specifically with NASDAQ. The second to file with NASDAQ, I believe, was Valkyrie when they redid their application. So you have the NASDAQ getting the preferential treatment from BlackRock, and I'm assuming as a part of that, they're just stepping out of the way and saying, listen, we'll handle the ETF, you handle the custody. So I'm assuming it's as simple as that. I mean, this is BlackRock, right? You don't they don't need to compete with BlackRock if they're going to be the ones who get that ETF.
Yeah. Forrest, any thoughts on this?
No, I think I think you both nailed it. Beyond that, just Prime Trust is a good example of custodianship is risky and difficult. Why expose yourself to that risk, and why go down that path if you don't have to? So I think it makes total sense.
Well, it seems like the U.S. is making progress to the adoption of crypto, particularly Bitcoin, while other countries are taking a step back. Breaking news: Kuwait has banned cryptocurrency and digital assets, or the virtual asset transactions in the country. And so I'll just keep this one vague. I just saw this on Whale Chart, so I haven't validated this, but it's something I just saw pop up on my Twitter feed. So any knee-jerk reaction on Kuwait there?
I mean, I haven't thought about Kuwait since the Gulf War. I don't know.
There you go.
Listen, I'm not surprised. Like, we get countries going in both directions. I would wait, obviously, to see more news on this. Dare say you could wait to get verification. See what I did there? But I don't know. It's a bad move, obviously, by Kuwait, but it's Kuwait. Who cares?
They do have a strong currency there. I'll leave it at that. I forget. They use the dinar, I think it is. So pretty strong currency.
I just never got to make a Kuwait pun. I never got to make a Kuwait pun before, so I'm pretty excited that you brought that up.
Well, we always love your puns. All right, well, Scott, we're gonna wrap it up. We always enjoy your time here with us. What's the next conference you're gonna come to, so I can make sure I attend this time? Pop up.
The next one I have in line is actually Token 2049 in Singapore in September, which is epic. It was the best conference of the year by far last year, because the conference is, I believe, Wednesday and Thursday, and then Formula One is Friday, Saturday, and Sunday. So I'm actually just using it as an excuse to try to go to Formula One and then pretend I'm at a crypto conference.
All right. Well, I'm gonna search my tickets now so I can go drop off.
Do it. That's the conference of the year. Like, the energy in Asia, I will say, like, really, as I said before, the energy in Asia is out of control. You know, it's really kind of slow and dampened, I think, in the United States, but over there, it's still full on. So I think you get a much more optimistic view of the crypto space if you go to conferences on the other side of the world.
Yeah, I definitely have to go check that out. All right, well, Scott, well, it was always a pleasure. And for those of you that are not familiar with Scott, where you been at, Wolf of Wall Street, the host and co-host of extremely popular Twitter space as well. Is there a title for your Twitter space? I just always tune in after it launches.
It's called Crypto Town Hall. Yeah, it's called Crypto Town Hall.
Okay.
Am I here? I think I froze.
Yeah, we hear you, but
but my face looks awesome though. Yeah, it's called Crypto Town Hall. You can remove me. That's really embarrassing, man. Come on. Now you gotta draw things on my face and stuff. But...
All right, brother. Well, it was always a pleasure. Have a good one. Take care.
Peace.
All right. All right. So taking a check in there on the chat here. If you are new, say hello, so you can drop an hola back at you. We do have Journals of Jade News, Norbert Reed, and for those of you, hola! Welcome to Sin City Crypto. Also, this is your last chance to hit the like button and show David's desk some support as well. And for that, we are going to wrap it up and bid a farewell to all of you. And so I will get our last sponsor shout out there back to Cam's Blue Wire Tech, who offers IT solutions for business grade networking. Also, they offer security as well. And so we have their link in the description down below. And to you, Forrest, do you have any parting words or anything you want to leave us with?
Guys, thanks for letting me join as usual. I'll be back on Friday, and I think I'm also on Monday and Tuesday, if I'm not mistaken, if plans haven't changed. Otherwise, tune back in tomorrow. Coming at you every day, every weekday, right?
Yeah, of course. Well, thank you so much. Well, that's going to do it for today's show. Guys, if you haven't had a chance to pick up some of Sin City Crypto merch, In and Out Crypto, it's printed on the top of Rocco's hat there, also at the bottom of this little advertisement. So we have not only Sin City Crypto merch, but you also got your Bitcoin, Ethereum, XRP, and a host of other products for not only you, your dog, and your lady. So go check those out. And then also, I'm going to get us out of here. So, Rocco, without further ado, run it.
Sin City Crypto. Cash is Kuwait. Yeah. Sin City Crypto. Everybody know we here for entertainment and info. Gonna show you how to get that big dough. So every day stay tapped in for big facts, no capping. With Bitcoin, if you're in, then you win. We divide the pie with no fraction. It's Big Rob, David. I split the game, but they gave it. Name the coin that's your favorite. I got dry powder, why save it? To the OGs, new beginners. Special shout out to the well members. Buy a dip, sell winners. Ain't really nothing you can tell sinners. Tune in for the latest new flavors. They gonna teach us mean coins. They polarizing like barbecue chicken pizzas. I laugh with a major grin. Laggers, we trade them in. Baddies, they came to sin. And sinners gon' play to win. Screaming hola till my bags are flowing over. Hold ya to the moon and to the solar. Won't I? Don't be letting FOMO control ya. It's over when the finger tornado close ya.